What's going on, everyone? I'm going to break down a trade we took yesterday on Friday for a long. This is the chart from yesterday. This is the chart open, and we entered a trade at 8:32. I'm going to mark it out right here. We entered around this area right here. We longed it, okay, and I'm going to show you the video after. But the question is, and for learning purposes, why did we enter this trade here? Why did I take a long right in this area? The first thing I do when I look at this is zoom out and look at the overall picture. Okay. At this point, the market had already sold off very aggressively right here. We had multiple large bearish candles, which tells me sellers were in complete control. Bearish, bearish, bearish. Sellers complete control. Now, most people would see a chart like this and either panic sell or think there's no way I can buy this. But after a strong move, I'm actually watching for signs that the selling pressure is starting to slow down. Right here is where it kind of caught my attention. Take a look at this candle. Notice how it initially pushes lower, but buyers step in and force price back up before the candle closes. That leaves this long lower wick. A long lower wick is important because it tells us something happened at these prices. Seller tried to continue to move lower, but buyers absorbed that selling pressure and refused to let price stay down. Okay. Think of it like playing tug of war, maybe. For the last several minutes, the sellers had been pulling the rope with no resistance, but on that candle, the buyers finally started pulling back. Now, one candle by itself isn't enough for me to take a trade. I always want confirmation. Okay, what's the confirmation? The very next trade. Where's my paintbrush? The very next trade here, right? This long candle right here starts pushing above the high of that rejection candle. That's important because it tells me buyers aren't just defending the lows anymore, they're becoming the aggressive side. That's where I entered my long. Notice something else. I'm not buying because I think I picked the exact bottom. I'm buying because the probability has started to shift. The shift is with conviction here, right? You see the shift. The sellers are losing momentum. The buyers are beginning to show strength. And my risk is very well defined. Now, say if price broke below the low of this rejection candle, my trade idea is wrong and I can exit with a very small loss, especially with 3 micros. Remember, we're just doing micros. But if buyers continue stepping in, there's a lot more room for the upside, and the ceiling is much higher on this trade than the downside. The reward is much higher than the risk. That's called a very, very favorable risk versus reward in this situation. So this trade wasn't random. It wasn't based on hope. It was based entirely on price action, an aggressive sell-off, a rejection candle showing buyers absorbed the selling, confirmation that buyers were beginning to take control, a clearly defined level for my stop loss, and a reward that was significantly larger than my risk. That's the exact type of setup we look for every single day. Remember, nothing works 100% of the time, but the goal isn't to predict where the market will do next. My goal is to wait patiently until the odds begin shifting in my favor. And in this favor, when we zoom in, it was a high probability trade. Sellers are beginning to slow down. Buyers are stepping in with conviction right here on a pullback we long. Okay. Now, if I were to explain this to a 5-year-old, I will say, imagine trying to push your little brother backwards. At first, you're winning easily. You keep pushing him back, step after step. That's what the sellers were doing here. Every red candle is another step backwards. Then all of a sudden, your little brother plants his feet. You push, but he doesn't move. You push harder, and he still doesn't move. Then he starts pushing you backwards. That's exactly what the candle is showing us. The sellers pushed price lower, but buyers planted their feet and said, you know what? Nope, we're not letting the price stay down here. We're going to push back. And that's why you see the long lower wick. It tells us buyers are fighting back. Then the next candle starts moving higher. Right here. That's like your brother not only stopping you, but actually pushing you backwards. That's when I entered. I didn't buy because I knew the market was going up. I bought because I saw the fight changing. The fight is literally changing right here, and this is what you have to look for in the markets. The sellers are getting weak, the buyers are getting strong, and that's all trading really is. Watching which side is starting to win the battle. Watching which side is going to start to win the battle. Okay, now let's watch it live. When I took it live, this is a screen recording of when I took it live. Okay, this is already pre-recorded from my actual session. And right there's the buy right there. Let's rewind it a little bit. You know, this is live from Friday, and this is on my YouTube too. I saw that the buyers were getting momentum. This was kind of confirmation. So on the pullback, I risked it. Okay. I was never letting this trade go lower than the lower lows here, right? So we had a plan in mind. If this got to 200, I would have got out of the trade. But the ceiling for a long was higher. So I let it ride out, and let's see what happened. Let's just watch. The price was pushing up. And this, you know what, this trade I held on for quite some time, and sometimes you have to see, right? So it was approaching also the 9 EMA, and I told myself if it closes above the 9 EMA or closes around it, then it's the buyers are in control and there's conviction, right? There's confirmation, there's conviction that this is going to go higher and higher. And look at the price closed right above the 9 EMA, and what happened? The next candle started aggressively pushing up above the 21 EMA and above the Bollinger Bands. And at this point, I know I'm not taking a losing trade here. And at the same time, we can't get greedy. So what I did to guarantee myself some money, because I'm not a greedy person, I slid my take profit up to a very respectful amount of money. And I said to myself, if it pushes down and stops me out, that is okay because I will take that. So let's see the rest of the trade. At first, I put it to break even, 1950, and I'm okay with that. A small trade of 1950, just so we don't get a fall, a quick sell-off of like 30, 40 points. We don't want that. You see the 9 EMA is still holding strong, and it's going to reverse right away here. It's got to be patient, right? And the thing with micros is you can be patient. You don't have to wait. There it is. It's gonna start pushing up. Remember, this is all patience, right? Trading is all patience. We waited, and there it is. So that was the conviction enough. And at this point, I think I slid my take profit to about 200 because that's what I wanted to make on this trade. I thought that was a fair trade-off. If I can make 200 on this trade, I'm a happy man, and I can log off for the day. Because really, what else more do we want? So we waited, and then I think at this moment we slid it up and it pulled out. I mean, I could even took this. I could take this for 300. I could have, but I didn't. Even 320. I think it went higher actually. Went all the way to up to 400 at one point, I believe. And a part of your letting your runners run and knowing when to take the profit, I think is key too, because you have to see where peak value was. My peak value was here at 440, 460, 480. And you know what, I should have took it there, but I decided not to, and I got a little bit greedy, and I moved this to 200. I said to myself, I'm okay if I make this much on the trade, 201, and I'm gonna let it go, because what if it kept getting higher? In reality, I left 200 bucks on the table because I could have cashed out at 500. I actually left 300 bucks on the table, but that is okay. You need to know when to gamble a little bit. You need to know what to do. So eventually, I should have took right there. Actually, 510 it was. I should have took that, but I didn't. Afford a little bit. It stopped me out at 200, and I made 200 on the trade. But hey, I still made the 195 on the trade, and I'm happy with it. And then we logged off right away. And if you see, that was at 8:35, and I was done for the day. So I explained to you guys why I took the trade. I showed you guys why I took the trade, and it's full of transparency right here. This is what I did. So that's it, guys. Every weekend I'm going to come in with you a segment. Tell me what you guys want to see. Love you.